You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/29/21. Well, person you're about to hear from, we haven't had on the show in quite some time, but we're thrilled to have him back. I'm talking about Peter Schiff. If you got a question for Peter, just send me an email, kl@kerrylutz.com, and we'll forward it off to him. Peter, hey, it's great to have you back. So what is going on in the world right now? It looks like we've dug a hole so deep that we're practically in China now.
Yeah, Kerry. The problem is, no matter how deep it is, we seem to be able to dig it deeper. But at some point, can't do it anymore. And I think we're getting very, very close to the end game here. It's now at reached such absurd potential, or not just potential, it's just what they're doing, reality. You got to realize or believe that they cannot keep doing this, and that a day of reckoning is close at hand at this point.
Yep, it certainly would appear that way, but we felt that way a number of times, and they managed to carry on and make the situation worse. How does the COVID pandemic, whatever you want to call it, how does it all figure into this?
Well, obviously, it gave politicians an excuse, right? They kept on giving so they can blame everything on the pandemic. Of course, they made it worse. The government's cure for the pandemic was worse than the disease. And so now we're not only suffering from the disease, but from the cure, right? I mean, all of the debt, all the money that was printed. But of course, this comes on the heels of all the other debt and money printing that happened before the pandemic. But I think it really accelerated the crisis, because not only have we created a lot of new money for people to spend, and we've created additional incentives for people not to work and just to collect money from the government. It's not just that more money is going to be chasing up prices, but you're going to have fewer goods that are actually produced for people to buy with all this money that central banks are printing. So you're really going to start to see rather dramatic price increases. And I'm not just talking about asset prices. We're used to that. We're used to seeing real estate prices go up and stock prices go up and stuff like that. But what we're really going to see to a much greater degree is much larger and materially significant increases in consumer goods. And I'm talking about across the board, pretty much all the goods and services that Americans or people around the world too, not just Americans, consume. Everything is going to get much, much more expensive. And so as a result of things costing more, people are going to buy less stuff because they simply won't have enough money. Even though they have more money, it won't be enough. And this is going to cause a big reduction in people's living standards and people's consumption. And the reason for this is because of the big growth of government. We have to pay for government somehow. Now, the governments aren't raising taxes, particularly in the U.S. We just had this $2 trillion stimulus. They're going to pass another one that now they're talking $3 or $4 trillion. They're finally talking about some tax hikes, but those tax hikes will pale in comparison to the spending increases. And it's not like we get all this government for free. We have to pay for it. And if the government isn't going to take our money, they're going to take our purchasing power. And so if the government takes my money, I have less money to buy stuff. But if the government prints money, then prices go up, then I buy less stuff. And so at the end of the day, I'm arriving at the same circumstances. I have less because the government has more. And that's what a lot of people are going to experience. Americans are going to have a lot less because so much more is being taken from them by government.
Yeah. Well, that's kind of been inevitable. Like you say, it's got to be paid one way or the other. So the easiest way to do it, and the least transparent way, is just to inflate the currency, print up more units and buy, and consumer prices be damned.
Yeah. And, they can try to cover it up with a highly rigged CPI. So inflation is much worse than what the numbers reveal. And then, of course, the government looks at those numbers and says, we don't have enough inflation, we need more, when the numbers themselves were designed to hide the inflation that we do have. And the government will make excuses about why it's transitory or why it's actually a good sign. It's a sign of a strong economy. This nonsense happens all the time. We just had our worst merchandise trade deficit in history announced on Friday. And the newspapers or the media outlets that reported on this record trade deficit said it was a sign of our growing economy, our strong economy. But it's not. It's a sign of how weak our economy is. We're so weak, we need to rely on imports because we can't produce the stuff ourselves. So they'll probably say the same thing with inflation. Yeah, prices are going up because our economy is so strong. But in reality, a strong economy would push prices down because a strong economy would mean more stuff is being produced. Therefore, you have greater supply and prices could fall. It's weak economies that suffer rising prices because they can't produce the goods that the citizens want to consume. And so the price has to go up. That's how you clear the market, right? Because you only have a limited number of goods, and as people try to buy them, they bid up the price. And as you give people more and more money, well, then they can bid the prices higher and higher.
Yeah, and we've seen literally trillions of dollars go out there. I mean, I never thought I would live to see the day, Peter, where the government was actually just sending checks to people or wires, whatever you want to call it, just putting money in your bank account if you could just prove that you had employees and you wanted to keep paying them. The fraud was monumental, both in expanded unemployment benefits, because the fraudsters knew that the government could not effectively handle the onslaught of claims, both for the PPP and for unemployment insurance, and the system broke down. And now,
it was a grab bag. I pointed this out from the beginning that everybody was going to take advantage of it. I mean, I personally could have taken hundreds of thousands of dollars of free money, just based on my business. All I had to do is say, I have employees and I need money to pay them. I had plenty of money to pay them. I didn't need the government money, but there was no real way of controlling for that. And there were a lot of big hedge funds that have a lot more money than me that got PPP money. A lot of much bigger companies, a lot of guys richer than me got PPP money. They didn't need it, but the government was giving it away. But of course, there was so much fraud. I mean, forgetting about the people that actually had legitimate businesses and had employees that they had no intention of firing anyway, because maybe their business actually improved as a result of COVID the way mine did, but they took the free money anyway. But there were actually people who didn't even have businesses that lied and made it up and got a bunch of PPP money, because you're just giving out so much money, no questions asked. Nobody has to put up any collateral. Nobody has to personal guarantee any of the loans, and they're not even really loans, they're gifts. You're just giving away money on a massive scale. There's going to be massive fraud. I mean, it's obvious, but everybody was in favor of it. All the Republicans were in favor of it. Donald Trump is the one that signed it. So, I mean, this was a big, boondoggle. And of course, it was bad precedent. I mean, I wish some of the Republicans that had the backbone to say, no, this is not how you respond to a crisis. You make government smaller, not bigger. You cut government spending because government is a burden on the economy. And now we have to deal with COVID. So we need to lighten that burden to impact, the greater, position the economy to deal with the negative impacts of COVID. Instead, we just made government a bigger burden on an economy that was already weakened by disease.
Yeah, and remember that old story about I think it was in 1921, the stock market took a huge hit, and what did I can't remember who was president then, but Coolidge, right? What did he do? He didn't up the stimulus and all of the subsidies. Instead, he cut back government by about 35%. The crash was over in 6 months, and the economy headed higher than ever.
Yeah, and it wasn't just the stock market. If you go back and you look at the statistics in 1921, and you compare them to the statistics in 1929, The 21 bust or 1920 bust, that one actually started off with a greater degree of magnitude than 29. Not just the drop in the stock market, right? But the drop in the economy, the overall decline in GDP. It was actually a bigger economic contraction that began the depression that wasn't than the one that was. And the reason the 1920 downturn was a sharp but brief recession, and the 1929 downturn became the Great Depression and lasted through the end of the Second World War. The big difference is the way the government responded. In 1921, the government did everything the Keynesians say you don't do. The government cut spending and shored up its finances, right? It actually had restrictive policies. And the economy prospered, and we had the roaring 1920s. The end of the 1920s got screwed up by the Fed, and they were too easy, and they turned the bull market into a bubble, and they caused some excess crazy speculation near the end of the 1920s. The 1920s didn't have to end that way. The Fed ruined it, right? But it began, from a very solid foundation that got out of hand because the Fed got too easy to try to prop up the British pound and stop money from leaving Great Britain to the U.S. But that's a story for another podcast.
Yeah.
But the point is that Herbert Hoover did everything that the Keynesians say that we should do. I mean, Hoover basically started the New Deal before Roosevelt. All Roosevelt did was expand on Hoover's policies. In fact, he ran very critical of those policies. It was similar to Donald Trump. Donald Trump ran very critical of Obama's policies, but then adopted them. And that's what Roosevelt did. He criticized Hoover's big deficits and the things that he did, and then he made them even bigger. But it's amazing that everybody thinks that it was Roosevelt that got us out of the Depression with his big government policies. Meanwhile, Roosevelt came into office in 1932, and when he died, we hadn't really even gotten out of the Depression. I mean, in his fourth term. And that was only because we were at war. But if you look at the economy from 1932 to 1941, when the war started, we were in depression the whole time. How could you claim that his policies are vindicated when we had the worst, recession ever with those policies and Hoover's policies, which was the same thing? Meanwhile, you have a perfect example of a depression that was averted that could have been even worse, but because we did the opposite of what they're saying now, because we cut government spending instead of increasing it, we didn't have a depression. We had a sharp recession that ended very quickly.
Isn't it ironic?
So we have all the proof, but the Keynesians ignore that. And everybody believes that we got out of the Depression because of big government and Roosevelt. Well, how did we get out of the 1920 Depression? We didn't have one. Now, of course, had Coolidge done exactly what Hoover did and Roosevelt did, then the Great Depression probably would have started in 1920 instead of 1929.
Yeah, that's totally ironic. And it's the proof that we don't learn from history, right? The only thing we learn from history is we don't learn from history.
Right. Yeah. Well, the people who are teaching it don't even understand it themselves. And they have a vested interest in maintaining the myth that capitalism doesn't work, that you need government to get it to function, because otherwise it's prone to these booms and busts. And somehow, we need government to save us from the bad things of capitalism, when what we really need is for capitalism to save us from government. Government is the problem. The free market is the solution.
Hey, what's the scariest words of the English language? Hi, I'm from the government. I'm here to help.
Oh, yep.
Yeah. So as Reagan said.
But unfortunately, that's how Biden got elected. Right? I'm going to help you. I'm going to solve all your problems.
We can't really say how he got elected, because then they'll just strike the video from YouTube. So we'll leave it to your imagination here. And really, now there's just no way out. This thing is going to have to run its course, isn't it, Peter?
Don't just survive. Thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, it's going to run its course like over the edge of a cliff. There's going to be a crash here. That's what's going to happen. It's going to be a spectacular collapse. That's what's going to put a stop to it. And I think it's going to be the dollar. I think we're going to have a currency crisis and a sovereign debt crisis. And, there's no government bailout for that, right? The government was able to bail the economy out of the mortgage crisis because they could print money and borrow, they were able to bail us out of COVID because they can print more money. Right?
Yeah,
but
sure.
when the crisis is the dollar, they can't print more money because then they just make the problem worse. The problem is there's too many dollars and nobody wants them. There's too many bonds and nobody wants to hold them because they're in dollars. So when we get into a crisis of confidence in the dollar, when we get into big inflation, nobody gets bailed out. Everybody has to suffer because the government has to cut spending. And so what if we're in a recession, which we will be? We'll be in a deep recession when we have a currency crisis, stagflation. The government has to raise interest rates. The Federal Reserve, rather, has to raise interest rates and shrink its balance sheet, even though we're in a recession. And of course, the act of doing that is going to make the recession worse. And because the Fed is tightening and not easing, there is no stimulus or bailouts. In fact, the government is going to have to fire people during the recession. The government is going to have to cut back on spending during the recession. The government may even have to default on its own treasuries. So it's not just going to be private borrowers that end up defaulting, but the federal government defaults too. All right, so this is what we're looking for. And of course, that is the better of the alternatives. The worst alternative is nobody has to default because the dollar is worthless, because the Fed doesn't let any of this happen. And they just keep printing and printing and printing. And, that's the worst case scenario. We destroy our currency. We render the dollar worthless. We turn it into monopoly money. Then what's our economy going to look like?
Hey, that's a good question. And the world economy is in such bad shape. Look, one container ship getting stuck in the Suez Canal, like the Suez Canal, nobody cares about the Suez Canal until it stops working, right? One ship gets stuck and it literally grinds world trade to a halt for a week now.
The world is very interconnected, and obviously a lot of cargo is moving through that port, a canal.
Yeah.
And you can't solve that by printing money, right? The politicians think the solution to every problem is printing money. Well, how does printing money do anything about it? All it does is you have more money to buy the stuff that's not there because it's not being transported. It's stuck,
The very definition of inflation, right? So quantity theory of money. So what do you think is going to be happening next? There's going to be like another disaster here at some point. I mean, we're teetering now. If you see what's happening in the market today, we've got a couple of hedge funds over the past few weeks that have gone bust, which is now affecting bank balance sheets. What's going to be with these hedge funds?
Well, obviously, there's always going to be some hedge funds that are going to blow up because a lot of these guys are just gambling. They're putting on positions and they're taking a lot of risk with other people's money because, they get 20% of the ups. So you make a lot of money when you gamble with other people's money. And if you lose, well, you're losing their money. Now, maybe you have some of your own money at risk too, but, you have that leverage. And so people generally press it. But the problem obviously is the lenders, right? Because if you're a hedge fund and you borrow a lot of money and then you lose it, what if you can't pay back your loans? And, the hedge fund just shuts down because ultimately the investors in the hedge fund are not on the hook for the losses that exceed the investment. the lenders are on the hook for those losses. But, they were never going to reap any of the profits. They were just going to get the interest on the loan. But, a lot of these banks are so desperate for interest that they were willing to take incredible amounts of risk, or maybe they didn't even appreciate how much risk they were taking. And so they just took more risk than really was prudent. And so, some of these hedge funds blow up and maybe they lose $10 billion, but maybe their bankers lose $50 billion because that's how much they borrowed.
Yeah.
So, we'll see. I mean, there's all this counterparty risk. And of course, what do the central banks do? Oh, you're too big to fail. You're too interconnected to fail. Let's bail you out. How do they do that? Print more money. But every time they do that, they simply increase the moral hazard that says, hey, go out there and gamble because if you lose, we got you covered. In fact, had we not bailed out a lot of these financial institutions in 2008, maybe they would have been a lot stricter about their lending criteria now. But, they learned a bad lesson. The lesson is, hey, don't worry about the downside. Just make as much money as you can, take as much risk as you can. And if it ends badly, well, you'll just get bailed out. You can do it all over again. Yeah, no consequences.
The so-called...
And then, and the problem is, there were probably some prudent guys, right? There were some banks, and I know there were. I used to talk to some of these people. There were some banks that saw all the reckless lending that was going on during the housing boom, and they decided they're not going to partake. And so they missed out on a lot of easy earnings that they could have had. But then when everything collapses, instead of being positioned to buy out a bunch of their competitors on the cheap because they were allowed to go bankrupt because of all the risks that they took, they watched all those competitors get bailed out. And now it's like, wait a minute. So I did the smart thing. I didn't make all this money when everybody else was. And now the market collapses, and all those people that made all that money during times are good, they get bailed out when times are bad. So it's heads they win, tails I lose. I mean, I didn't make any money then, and now I'm helping to pay to bail them out now. So I think the message was, hey, if you see a party, join it. Right? Don't worry. Don't be the prudent one that says, hey, I'm not going to do this foolish thing. Just do the foolish thing because there are no consequences. The consequences are you sit on the sidelines and you lose out. There's no, just get out and go to the party because, if the cops raid it, your uncle's going to get you out of jail. So why miss out on the fun?
Yeah, it's sending out the very wrong, the worst possible message that it pays to be reckless, right? And it would be like if the
it's a bit.
And it would be like if the cops, rather than you're a drunk driver getting arrested and taking you in, they stop you and they give you a gift card at the liquor store. That's what it's kind of
or maybe they just give you a drink and send you on your way.
Just
in case you weren't drunk enough.
It's the definition of insanity, isn't it?
We're definitely insane. For sure.
So there can't
now the inmates are running the asylum.
Yeah. Well, I always said that what we're dealing with here, the cure is the disease. Because their cure is to print up more money, go into more debt. And the disease is printed money, fake money, and debt. So really the cure, is the disease.
It's like the old-fashioned doctors or whatever they were called, medicine men, when somebody would get sick and they'd say, I guess we need to bleed them. And then they would suck out their blood, and then, oh my God, the guy is sicker. Well, I guess we didn't take out enough blood. Let's bleed them some more, right? They're dying of the bloodletting. They're actually, the cure is killing the patient.
Oh yeah.
And that's exactly what's going on right now. We got a cold, but now we're getting killed with toxic chemotherapy.
It's well, you got to just laugh about it. So what can the average person do now? Is there anything that you can do, Joe Sixpack, to prevent the inevitable here from being swallowed up in this conflagration, this economic conflagration?
Well, I don't think there's anything us mere mortals can do to prevent what's going to happen. It's going to happen whether we want it to or not, and whether we try to do something about it or not. I mean, the forces are already in motion. it's kind of like there's no turning back. I mean, you jump off the top of the Empire State Building, you're going to hit the ground. It's just not, once you've made that bad decision, it doesn't really matter what decisions you make on the way down. It's inevitable that you're hitting the concrete. So this crisis is going to happen. I mean, the only thing we could do is to try to mitigate the damage personally by having the right investments. Now, that may not matter if at the end of the day, the government just goes full on, socialist, communist, whatever you want to say, and they just take all of our money. So even if you manage to avoid the financial collapse, you may not avoid the government just saying, aha, you're one of the bad guys because you didn't go broke. You're one of the guys that caused this. You're one of those speculators that sold dollars and bought foreign currencies or bought gold. You caused this problem. So we're just going to take all your ill-gotten gains, right? Windfall profit tax or just confiscate. So who knows? But what I know that I could do is position people. I position myself and help to position others to minimize their personal financial damage by recognizing that the biggest, casualty is going to be the dollar. And the collateral damage is all the people who are depending on dollars, savers, retirees, people who have pensions or annuities or insurance policies, or, a lot of these paper wealth is just going to go away. It's not going to be there. But if you recognize how things are going to be different in the future when the U.S. dollar is not the world's reserve currency, when Americans are not able to live beyond their means by printing money to buy all the stuff that the rest of the world produces, but that our economy is too inefficient and unproductive to manufacture. And, when we see this, there's going to be a big change in relative asset prices and foreign stocks, particularly in emerging markets, particularly in Southeast Asia. These assets are going to be marked up considerably relative to assets in the U.S. There's currencies are going to go up on a relative basis. The standard of living in these countries is going to rise significantly in the post-dollar era as the standard of living in America plunges. So I want to own the stocks that are going to do well, the businesses that are going to thrive with the rebirth or the birth of the emerging market consumer as they dethrone the American consumer. I want to own resources. I want to own the businesses that have those resources that the emerging consumers are going to be buying and needing for all the things they're going to want. I want to be in the currencies that are going to gain the value that the dollar loses, and I want to be invested in countries that are not going to be in such a position that they're going to be imposing much more stricter and onerous rules and regulations and more confiscatory types of taxes. And that's where I want to have my money. Unfortunately, the United States is in a very bad position. And, the pendulum is swinging in the wrong direction. I mean, in a way, it swung in the right direction for a little bit with Trump, but we squandered that. Trump talked a good game as a candidate, but unfortunately he governed more like Obama and continued the big government deficit spending ways of prior presidents. And so now a lot of people think we tried it differently. We tried a free market approach and it didn't work. Of course, we didn't actually try it. We just pretended, but that did a lot of damage to the brand.
Yes, it certainly did. Well, there's definitely trouble ahead. That is for certain. And Peter, where do we find your work, your podcast, connect with you on the web?
Well, I'm always doing my podcast on Schiff Radio. You can also listen, iTunes or any place that they have podcasts. In the investment category, I'm usually somewhere in the top 20. Sometimes I manage to break into the top 10, but I'd actually be a lot higher if so many people didn't listen on YouTube. I mean, most people doing investment podcasts don't have the type of YouTube audience that I have. I mean, I have about 245,000 subscribers on YouTube, and probably when I post my podcast there, I get about 80,000 people listening. And so those listens are not counted in my ratings numbers on the podcast, on the podcast site. So if you combine my YouTube audience, I probably never would be out of the top 10. I might even be in the top 5 probably. So you can listen to the podcasts, share them with your friends, follow me on Twitter. I'm on Instagram now too. That's relatively new, so I don't have nearly as many followers yet. I've been on Facebook for a while. So, I post stuff on the internet, so it's good to follow the things that I post and share them with other people so they get introduced to these ideas of, free market capitalism and sound money. But also, again, talking about trying to save yourself, you got to get your portfolio in line. And I'm not, a guy telling people, hey, just hide in gold and just put all your money in gold bullion and then put the rest in bullets and stored food. I'm coming up with quality portfolios, good stocks around the world, businesses that are well managed, good balance sheets, good earnings, paying good dividends. I'm building real portfolios that are great inflation hedges because the prices will go up more than the dollar goes down. I think they pay real good income now that will help you offset the rising cost of living. And as the cost of living goes up, the dividends should go up. The dividends are not in dollars. They go up as the dollar goes down. But as inflation spreads around the world, I'm investing in companies that will be able to raise their prices. So when you own a bond, you've got a coupon that's fixed for the life of that bond. And as inflation goes up, it erodes away your income stream. But if you own dividend-paying stocks, they just keep raising their prices and they grow their earnings. And so they have all sorts of ways to increase your income so that your income can rise faster than your costs.
Right.
Most people in America are going to see their costs skyrocketing and their incomes won't even come close to keeping pace.
Yeah, pretty scary out there, but I guess we're just going to have to get through it.
Yeah, so my website, europac.com, EUROPAC.com, or directly to my asset management company in Puerto Rico. It's epacfunds.com, EPACfunds.com, and, set up an account, talk with me or talk with one of my advisors and, get information on the strategies, my mutual funds, my managed accounts, my wrap accounts, brokerage accounts, so things that we could do to help really, get your financial house in order before the house of cards, that is the U.S. economy, collapses.
And it is a house of cards, and there's a kind of inevitability to it. Peter, we really appreciate your coming on and sharing your wisdom with us. And hey, we'll talk to you again soon. Any questions for Peter, send us an email to kl@kerrylutz.com. And of course, sign up for the newsletter, financialsurvivalnetwork.com. Peter, we'll talk to you again real soon. Be well.
Thanks, Kerry. All right, great. Bye-bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.